So do you want to start investing in Canadian stock market but don't know where to begin? I'll cover everything you need to know: which accounts to open, TFSA, RRSP, RESP, FHSA, which broker platforms to use, Wealthsimple, Questrade, Moomoo, interactive brokers, and etc. How to find the right stocks and which websites or news channels to follow for the latest information. I'll also explain the basics about the stock analysis, and by end of this video you will have all the knowledge you need to start. So trust me, it will be worth it. So first, let's cover the account options available to you. I'll cover the TFSA, RRSP, and FHSA. So TFSA is a tax-free savings account. A TFSA allows you to grow your investments tax-free. Any gains you make, such as interest or eligible dividends, are not subject to tax. Additionally, you can withdraw money from the TFSA at any time without paying taxes on those withdrawals. However, contributions to a TFSA are not tax deductible, so they won't reduce your taxable income when you file your returns. The second account is RRSP, Registered Retirement Savings Plan. So an RRSP is designed for the retirement savings. Contributions to an RRSP are tax deductible, meaning they can lower your taxable income for the year, which can help with your tax returns. However, when you withdraw money from an RRSP, it is taxed as income. You can also use an RRSP money to buy your first home through the home buyers plan, but you will need to repay the amount you withdraw over the 15 years. The third account which I want to mention is FHSA, which is First Home Savings Account. So the good point about FHSA is that it combines benefits from both TFSA and RRSP. You can grow your investments tax-free like TFSA, and contributions are tax deductible. So those contributions will help you reduce your taxable income. And when you withdraw the money to buy your first home, it's tax-free, and unlike RRSP, you don't need to repay the funds. So now the question comes that which account is best for you, and that depends on your personal situation. If your employer offers RRSP matching, consider opening an RRSP. If you have kids, RESP should be considered. If you are planning to buy your first home, the FHSA is a great option. A TFSA is a no-brainer for everyone. And if you are unsure which account to start with, a TFSA is a good option to begin with, and use your available contribution room. I won't go into further details here, but feel free to ask any questions in the comment section. Now, once you have decided which accounts to open, the next step is choosing where to open them and start investing in the stock market. So you can consider broker platforms like Wealthsimple, Questrade, and Moomoo, and you can also check with your banks. When choosing a broker, the first thing to consider is minimizing the commissions and currency exchange fees, as these can impact your long-term gains. And the second factor is the availability of information about the companies, including news, financial data, analyst ratings, and advanced tools. So to invest in Canadian stocks, Wealthsimple is a great option due to its commission-free trades. However, for US stock investing and option tradings, Wealthsimple might not be ideal because of its high currency exchange fees and limited company data or limited stock information. And in this case, Questrade and Moomoo are worth considering. For more details on US stock investing and option trading, check out this video where I have compared these three brokerage platforms for clarity. I would highly recommend visiting the websites of all these brokers to compare their fees for trading for both Canadian and US stocks. But in general, opening TFSA, RRSP and FHSA accounts on most of these platforms, it's straightforward. If you are still unsure which broker to choose, Wealthsimple is a solid option to start with. You can find the link to open the accounts with Wealthsimple and Moomoo in the description, where you can also earn some rewards. Now, after having an account opened with any of these platforms, the third point is to understand the overall stock market and find which stocks to buy. Now, with over 1500 companies listed on the Toronto Stock Exchange, it can be challenging to know about all of them. To narrow down your options, refer to the S&P TSX 60 index, which tracks the performance of the 60 largest Canadian stocks on the TSX, and it represents the broader Canadian economy. You can watch this video to learn about all of the 60 stocks. Now, apart from the Canadian stocks being a neighbor to the largest economy in the world, we should definitely take the opportunity to invest in the US stock market. The S&P 500 index tracks the performance of the top 500 companies listed on the US exchanges, including major firms like Apple, Google, and Microsoft. Another key index is Nasdaq 100, which focuses on the top 100 stocks with a strong emphasis on technology companies. So familiarizing yourself with these top indexes can provide valuable insights into leading companies and market trends. And of course, you can watch the videos on our channel or other channels to stay updated on the latest opportunities. But again, if you are a total beginner and prefer not to pick individual stocks, the best strategy is to invest in low-cost index ETFs that tracks the indexes mentioned earlier. So for example, VFV tracks the S&P 500 and it is listed on TSX in Canadian dollars. One important point to know is that diversification is a crucial in investing, because you don't want to risk all your money by putting all the eggs in one basket. So index ETFs help diversify your investments across various companies and sectors. For instance, during COVID time, industries like airlines, restaurants, and hotels were negatively affected, but a diversified portfolio with exposure to healthcare and some technology stocks could help offset those situations. So my recommendation would be, initially while you are learning about the stock market investing, allocate a major portion of your money to index ETFs for broad market exposure and diversification, and use the remaining funds to diversify your portfolio with individual stocks which you think will perform better in the future. So for the fourth point, let's look at where to find reliable data and information on individual stocks. To check stock prices, you can use Yahoo Finance or brokers like Wealthsimple, Questrade, or Moomoo. Please note that some platforms may have a 15-minute delay in the data of stock prices. Then for the charts and detailed financial data, Yahoo Finance and TradingView are excellent options, with TradingView being particularly useful for technical analysis. Moomoo also offers level 2 data for free, which provides in-depth market information. Watch this video for more details. And for the latest news, Yahoo Finance and major news sites like Bloomberg, the Globe and Mail, and the Wall Street Journal are valuable resources. Additionally, companies also update their latest news and financial results on their investor relation pages, so you can check that too. And the last but very important point is understanding the basic financial terms like price to earnings, which is PE ratio, price to book, PB ratio, dividend yield, dividend ratio, and debt levels for any company or stock. We will dive deeper into these financial terms in another video, but with this knowledge, you can do a basic analysis of a company and its stock, and this will make you understand that any company or stock is overvalued or not. But to give a brief understanding, there are two main types of analysis you can do. One is fundamental analysis and second is technical analysis. So fundamental analysis involves looking at the company's financial health by reviewing its earnings, debt levels, and overall business model. It also includes considering the macroeconomic factors like interest rates and inflation, then geopolitical events that could impact the company's performance, and this helps you assess whether the stock is priced fairly based on its true value and if there is a potential for growth or not. And the technical analysis focuses on studying the past stock price movements and chart patterns to predict the future trends. So basically, it looks at the historical data and technical indicators to forecast short-term price changes in the stock. So to conclude this video and to start your investing journey, focus on these 5 essential points. So first is understand the different accounts, learn about TFSA, RRSP, FHSA, RESP to choose one of the best accounts for your financial goals. The second is select the right broker, compare all the brokers available like Wealthsimple, Questrade, Moomoo, interactive brokers to find the one that fits your needs and offers the best rates. Then the third point is understand the market. Familiarize yourself with both Canadian and US markets, including key indexes and ETFs to make informed investment choices. The fourth point is use reliable websites and news channels, access accurate stock and company information from sources like Yahoo Finance, TradingView, and major news outlets. You can also use your broker platforms to access these details. And the fifth and very important point is learn how to do the basic analysis of any stock. Understand fundamental and technical analysis to evaluate stocks and make informed investment decisions. This video is for an educational purposes and please do not consider it as any financial advice or recommendation. Thanks for watching this video. If you have any questions, feel free to ask me in the comment section. Thank you.